For what feels like an eternity, Melbourne has been the steady, reliable player in Florida's wild property game, while cities like Miami and Tampa were grabbing headlines with the supercharged growth. The Space Coast was seen as the sensible alternative, strong but not spectacular. Investors keep a watchful eye, concerned about soaring insurance costs and economic shifts. Prices were normalizing and confidence was solid, but not soaring. The story was set. Melbourne is a market for the long haul, not for the quick wins. But just when everyone thought they had the script figured out, the final quarter data for 2025 has landed, and it's revealing something that challenges all those expectations. Melbourne's housing market is doing something that many thought was unthinkable. The data we're seeing isn't just a minor blip, it's a fundamental shift that could signal the start of a brand new cycle of acceleration. In this video, I'm going to be exposing the surprising trends that has caught experts off guard, break down the 4 key drivers behind the incredible new momentum, and most importantly, show you where the fresh opportunities are hiding before the rest of the market catches on. If you're serious about understanding the Florida property market and want to get ahead of the curve, you'll want to stick around for the insights I'm about to share today. Let's get right to it. The single most surprising statistic from the fourth quarter is the sheer resilience and renewed momentum in buyer activity. Many Florida markets are seeing a significant cooling, with rising inventory and falling sales. Brevard County is the bucking trend. Pending sales have climbed year over year, a clear sign that buyer demand is rebounding. This is happening as inventory has started to tighten again, moving towards a balanced 5.5-month supply, which gives sellers renewed leverage. This isn't just stability, it's a breakout. After a period of normalization, Melbourne is suddenly showing a pace of activity that's starting to turn heads. Some forecasts are now predicting the Space Coast will continue to be the hub of growth leading into 2026. So what the hell is going on? Now, to really get how significant this fourth quarter shift is, we need to rewind a little bit. For the last few years, Melbourne's property market has been strong, but it existed in the shadow of Florida's boom cities. While it wasn't a poor performer, it lagged the explosive growth seen in markets like Miami or Naples, where values grew substantially between 2020 and 2024. This divergence was massive, and both homebuyers and investors saw faster, more dramatic returns elsewhere. Then came the policy and economic headwinds. The Florida-wide insurance crisis has been a major story, with rising premiums creating uncertainty and increasing holding costs for the homeowners and investors alike. On top of this, after the frenzy of the pandemic years, the market entered a period of normalization, with homes sitting on the market longer, climbing to an average of 47 to 62 days in 2025. That's up just 16 days from 2021. On top of this, Melbourne had its own unique population story. While the Space Coast has seen steady population growth, it has been driven by a strong job market rather than speculative rush seen in other parts of the state. The area's economy, tied to aerospace and tech, has provided a stable foundation, but it didn't create the same frantic energy as other Florida hotspots. This mix of moderating price growth and challenging insurance costs has created a powerful consensus. Now, Melbourne was a stable but less exciting market. It was seen as the sensible cousin of Florida property. Investors were looking to South Florida for luxury and Tampa for explosive growth. Melbourne was on the back burner, and that's exactly why the data from the late 2025 is so surprising. So, let's take a closer look at the numbers that are rewriting the narrative. This isn't just one isolated statistic, it's a wave of data pointing towards a gathering recovery and a new momentum. The first piece of evidence is the headline buyer activity we've already touched on. After a period of cooling, pending sales in Brevard County rose in September year over year. While median prices have seen modest single-digit changes, they're holding relatively steady. The increase in transactions shows that buyers are re-entering the market with confidence. What's more, this momentum is becoming more broad-based, with demand returning to many corners of the county. Now let's check the market's pulse. Buyer competition. A year ago, the market was softening, but as we close out quarter four, we're seeing signs of renewed competition, especially for homes under $300,000, which remain in the tight supply and often attract multiple offers. While homes on the market for a median of around 68 days, properties that are priced correctly are selling much faster, with nearly half of all homes selling within the first 30 days. This tells us that the motivated buyers are back, and that fear of missing out, or FOMO, is slowly creeping back into the picture for the best properties. But here's where it gets really interesting. And this might be the most unthinkable trend of all. For years, the Melbourne story was all about single-family homes. The condo market was often seen as secondary, but the Q4 data hints at a stunning reversal. While the single-family market is balanced, the condo and townhome market has shifted into a buyer's territory, with inventory climbing to an 8.4-month supply. This has created a huge affordability gap, with the median sales price for condos in August of 2025 around $270,000 compared to over $365,000 for single-family homes. Now, why is this unthinkable? Because it creates a massive opportunity. As single-family home prices remain elevated, savvy buyers and investors are now seeing incredible value in well-located condos and townhouses, which offer a much lower entry point into the desirable Space Coast lifestyle. The humble condo, long seen as the underdog, is now poised to be a hero for value-focused buyers in the area. Now, let's talk about supply and demand. You think that with a balanced market, supply will be plentiful, but the data shows a more complex picture. While overall active inventory is up from the frantic lows of past years, it has recently tightened, and new listings for both single-family homes and condos were down year over year in 2025. This is a classic recipe for future price growth. Motivated buyers competing for a shrinking number of new properties, shifting the balance of power back towards the seller. When you put these pieces together, accelerating buyer activity, tightening supply, the reemergence of the value-driven condo market, and a tight supply-demand balance, the conclusion is clear. The quiet performer is finding a new gear. Now, a market doesn't just turn on a dime without some powerful forces at play. This surprising Q4 shift isn't an accident. It's the result of several key drivers coming together at the perfect moment. Let's break down the 4 factors fueling Melbourne's comeback. First, and most importantly, it's about jobs. Property is a demographics game. Brevard County's economy is a juggernaut anchored by aerospace, defense, and technology giants like SpaceX, Blue Origin, Northrop Grumman, and L3 Harris. Unlike other Florida economies heavily relying on tourism, the Space Coast is a hub for high-paying, skilled jobs that attract a steady stream of professionals and their families, creating a consistent housing demand. The second driver is the affordability tipping point. For years, buyers looked at the overheated market in South Florida and Central Florida, and they saw the Space Coast as the cheaper but less exciting cousin. That period of more moderate growth has created a compelling opportunity. The price gap between Melbourne and other major metros like Miami or even Orlando became enormous, with a median sales price of around $343,000 to $400,000. Melbourne looks like a bargain. Smart investors and frustrated first-time homebuyers are now looking at Melbourne and seeing incredible relative value. The perception is shifting from Melbourne being just a stable market to Melbourne being a deal waiting to happen. Now, the third factor, and this one is critical, is the rental market. Think of the rental market as the canary in the coal mine. And right now, that canary is singing loudly. The rental market is thriving. With high demand and rising prices, the average rent for an apartment in Melbourne was around $1,610 in late 2025. And that's nearly a 1% increase over the previous year, keeping pace with renters' demand. This has 2 big effects. It pushes tenants who are struggling with rent to become buyers, and it pulls investors back into the market as rental yields remain strong. The final driver is a story of supply, or the lack of it. While demand is being fueled by job growth, the pipeline of new homes is facing hurdles. While numerous new construction projects are underway, they are not enough to satisfy the demand created by a growing population and a thriving job market, particularly for entry-level homes. At the exact moment, the high-tech professionals are arriving for new jobs. The supply for affordable housing is struggling to keep up. This fundamental undersupply is the rocket fuel for the market momentum we are facing today. These 4 factors, a booming high-tech economy, a compelling affordability advantage, a strong rental market, and a chronic housing undersupply, have created the perfect storm. This isn't a temporary blip, it's a structural shift that is setting Melbourne up for a period of sustained growth. So, the big question is, where are the opportunities? It's one thing to know the market is turning, but another to know where to look. First, let's talk about the master plan community turnaround. With families and professionals flocking to the area, we're seeing renewed interest in master plan communities like Vieira and Suntree. The key is to look at both new construction and resales. These communities offer a lifestyle package with great schools, amenities, and safety that is hard to beat. The market here has under a 4-month supply, making it tighter than the county average. Now, next up is the beachside value play. These are the condos and townhomes in desirable coastal areas like Satellite Beach, Melbourne Beach, and India Atlantic. While the single-family home market here is pricey, the condo market has softened, creating a buyer's market. This is a rare chance to find a property with ocean proximity at a significant discount compared to a house just a few streets away. Then we have the inland growth corridors. This is where affordability meets infrastructure. Suburbs to both the south and west, like Palm Bay and West Melbourne, are still affordable entry points for many. They offer attractive lifestyle options and are benefiting from huge government and commercial investment, including new retail and infrastructure projects. For investors and first-time buyers with a long-term view, these corridors are a chance to get in before the next population wave push prices even higher. And finally, we have to come back to condos and townhomes across the board. The data is clear. An 8.4 month supply has created a true buyer's market. Look for 2-bedroom units in those beachside communities or in well-maintained complexes in Melbourne proper. These properties are the missing middle that appeal to first-time buyers, downsizers, and young professionals priced out of the single-family home market. The key takeaway is this: the opportunities are no longer in just one part of the market. Whether it's a condo with an ocean breeze, a family home in Vieira, or a house in a growth corridor, this market upswing is creating chances across the board. So what does this all mean for you? Well, it really depends on which side of the deal you're on. For buyers, the message is getting clearer. The clock is ticking, especially for single-family homes. The window where you had growing choices and negotiating power is starting to close as pending sales rise and inventory tightens. We are moving from a balanced market towards a seller's market again. Demand is picking up, and many are acting now to get in before further price appreciation happens. For condo buyers, you are currently in the driver's seat with more options and negotiation power. My advice? Don't wait for the headlines to tell you the market has already boomed. Get your mortgage pre-approval sorted, know your budget, and be ready to act when you find the right place. Competition for well-priced homes is rising, and good properties are selling fast. Now, for sellers, the tide is turning in your favor. After a period of slower sales and price normalization, you're now in a stronger position. With demand picking up, your property is more likely to stand out. Now, however, this isn't a time to be greedy. Today's buyers are more confident, but they're also smart and have more options than in the past years. Pricing your property competitively from the get-go is critical. Overpriced homes will sit there even in a rising market. Presentation is everything. The sellers who get the best results will be those who price correctly, present beautifully, and are ready to meet the market. For both buyers and sellers, working with an expert who understands these local trends is more important than ever. This is a market that will reward smart, informed decisions. Now, we've covered a lot today, and it all points to one thing: the Melbourne property market is at a critical turning point. Understanding this shift is the first step, but taking confident action is what really matters for your financial future. Now, if you're feeling a bit overwhelmed, or if you're excited but unsure about what to do next, my team and I are here to help. We live and breathe this market every single day, helping our clients navigate these complex changes to build long-term wealth. If you want a tailored strategy to capitalize on the surprising turnaround, I invite you to click on the link in the description below and book a complimentary, no-obligation strategy session with me and my team. We can discuss your personal goals and map out a clear path forward for you. Do yourself a favor. Don't let this opportunity slip by. So there you have it. Melbourne's housing market has done the unexpected. After being seen as the stable but less exciting player in the Florida property market, the data from Q4 2025 provides clear proof that it's entering a new phase of momentum. This isn't a speculative boom. It's a recovery built on a solid foundation of a high-tech job growth, a chronic housing undersupply, and a strong rental market, as well as an affordability advantage. Now, this has become too big to ignore. Forecasts are now aligning with many experts predicting the Space Coast will continue to outperform many other Florida markets in 2026. For years, we've talked about Melbourne as the hidden gem. The evidence is now clear. That gem is beginning to shine brightly. The market has shifted, and the momentum is building. The unique opportunity to buy into a world-class coastal region at a relative discount will not last forever. The only question left is, will you be in a position to take advantage of it? Thank you for watching. I'll see you in the next video.